On the red dot, they said, right? Well, I want to take a moment to reflect on one of my most fondest memories growing up. And this is the school commute. Traditionally, with me and my father, navigating our way through the traffic. As per usual, I'd be the one making sure that we run late. Our conversations will be filled about my academic activities and schooling activities that I'd expect to participate in the day. And of course, in the background, there would be the medium of talk radio. Traditionally, where interviews and conversations would take place between politicians, business, would listen to the traffic update. And of course, when the news report came on, at the end of the bulletin, you would hear the gold price is trading at, Brent crude, and the dollar-rand exchange rate. And at the time, I didn't care much for many of these numbers because practically, I didn't really care for it. I didn't understand or grasp the concept as to why I would have to wonder and know what gold is trading at, why the currency crosses also impacted my life, or even how to find a barrel of Brent crude oil. But fundamentally, these are all themes now in my career, and now that I've grown to be someone who is now represented as the voice on the other side, speaking about these numbers and sharing much of this data and information with the public, I now have a better, firmer, and clearer understanding as to how all of these elements play a role into what we need to know about our money. And I say this also reflecting on the man that my father is. A gentleman who worked incredibly hard to be self-actualized, develop himself personally, increase his revenue streams, and of course, like all good men do, provide for himself and his family by purchasing a property for us and of course making sure that he not only took great care of our future, but prepared for his own future by making sure that he put some funds away traditionally for his retirement. So why am I telling you all of this? Well, as I reflect on the life story of my father and how he operated as an employee at the time, pursuing other business opportunities, it now makes sense why the bulletin with the gold price, the barrel of Brent, and the dollar-rand exchange rate matters. Because through my journey and through my career, I've identified that these all speak to three pillars that remain fundamental to how we as ordinary South Africans, working class citizens, the world over, essentially interact with money. And they're three Ps. So in my journey as a financial journalist, as a broadcaster, I get to interact with a number of individuals, a few entrepreneurs who are seated here in the audience, business leaders, government officials, and fundamentally we talk about concepts and themes from economic policy to unpacking what business opportunities might remain, and of course, the investment agenda. And all of these have an impact on our pocket. But let's speak about our pockets individually. Naturally, this does reflect our income streams, how you and I generate an income. And traditionally, for many individuals, we do this by seeking some form of economic activity. We're well aware that not everyone is able to be employed in South Africa, but of course this does speak to the new opportunities that come on board for individuals to augment their income. Side hustles, a new sexy phrase that might have come about just to elaborate and expand on how it is that individuals are pursuing new opportunities of creating revenue streams. And this has certainly been highlighted and exacerbated by the pressures of the COVID-19 pandemic, where regardless of whether we like it or not, all of us have somehow felt the pinch of the pandemic on our pockets. But if we think about side hustles themselves too, perhaps they're not anything new. I recall a time when my own mother found new alternative ways of augmenting her income. Everything from selling vegetables to selling perfumes, dreaded Tupperware, and of course, even selling secondhand clothing. And this does speak to the theme of how it is that we need to work and operate in the environment that we're in to expand on our revenue streams. One thing, though, that the pandemic has certainly highlighted for many of us as South Africans is the very low savings rate that we have. As a matter of fact, we're actually highly indebted. For every R1 that a South African earns, 75 cents of that goes to paying off debt. It's debatable whether or not it's for a good cause, but ultimately it raises concerns that we do need to focus on making sure that we have a big enough buffer just to get us by, especially in times of emergency or when we find ourselves under key financial pressure. But the interesting thing about money is that you can't mention money without feeling all sorts of emotion, right? Whether it be a sense of anxiety, whether it be the excitement for the opportunities and the options that it might present you with, or even further pressures and feelings maybe even of depression, which we've witnessed in the last 16 months, again, brought about by the pandemic and the unfortunate job cuts that we've seen in the country. So what does this tell us? Well, next time you hear someone talk about the Brent crude price and the dollar-rand exchange rate, identify that all of that will have an impact on your pocket at the end of the day, through the petrol price. Not only the fuel in your car, but the fuel that needs to pump up the trucks that pick up the bread, take it to the factory, bring it back to the shelf, and you making your way to go purchase it. Ultimately, all of these are elements that are interlinked, and they do raise great senses of anxiety, curiosity, but also for us to better understand how it is that we work and operate within this world of business, finance, and numbers. Property. Now, this is quite an interesting one. If we take a look at the South African environment and really humans overall, having a sense of shelter and a property is an emotive decision. It's one that creates a great sense of excitement. For first homeowners, one would naturally be able to relate to the feeling of being proud, assisting your parents with extending or renovating their home. And this makes sense because if we consider Maslow's hierarchy of needs, having a shelter or a form of property forms one of the fundamental rudders of the physiological needs that are required by human beings. So it's only natural that when we think of owning a property, fixing a property, having a place to call your castle, it fills us up with ongoing emotions of great sense and of pride. What's been interesting about the property market in South Africa, though, is that many have been saying there's a boom. And we might actually believe that that would be true, primarily because of the fact that there's been an increase in purchasing activity. So what does this mean? Well, let me tell you what it means about South Africans and what we've been doing about property lately. We've been buying more. Having engaged with a number of financial services institutions, the very same companies who go to the banks and help approve your bond, essentially more and more South Africans are putting in their applications to say, hold on a minute, maybe renting's not so much the long-term option, but I'm more than happy to buy. And the interesting facts that we're seeing about the people who are buying these properties is data that's recently been released by FNB related to the Deeds Office, which highlights that the average property owner in the last 16 months is about the age of 34 years old. Not only that, but they're also looking to purchase apartments or property within gated communities and complexes, sectional title. Aside from that, they also do have the opportunity to raise significant amounts of capital, on average purchasing homes between 750,000 Rand to 1.1 million. But one particular stat that makes me quite proud is the fact that we're seeing more and more single women are leading the charge by being property owners in South Africa. And this is a trend that has been existent since 2018. And if that's not impressive enough, single women actually outpace married couples and single men combined. Let that sink in. So this tells us something about the environment that we're in, and again relates to those news bulletins and the numbers and the facts and the figures that would often be shared. The MPC, the Monetary Policy Committee of South Africa, through the South African Reserve Bank, they've essentially kept interest rates at an all-time low over the last 16 months due to the pandemic. Now, naturally, there's a whole economic explanation behind it, but essentially what they're looking to do is to make your life easier in terms of accessing credit. It's never been cheaper in the South African environment to be able to take out a loan, as the prime interest rate sits at 7%. So what are we learning here? When next time you see Lesitja Kganyago on TV in his very stern approach and address telling you about their hawkish or dovish stance, don't worry about the birds he's talking about, but focus on that percentage, because essentially the number that gets released plays an influence on how you and I are able to access credit, able to purchase property, able to purchase vehicles, and a myriad of other opportunities that might exist in the market. Another important element that speaks to how South Africans actually spend their money, what we need to know about our money and how it's connected to the world, is a topic that might not be too sexy, but it is quite important. I'm sure when you think about your pension, you consider having gray hairs, sitting on a rocking chair, basking in the sun, in your lackadaisical years of retirement. But the truth is, the concept of retirement in South Africa and the world over is actually changing. No longer is it about reaching the age of 65 after 40 years of hard service at one company, receiving a gold watch, and then moving on to raise your grandkids. Retirement is now being considered as a concept of the multiple careers that we're able to exploit in our lives. And this comes on the back of recent data that's been shared publicly by financial services institutions like Sanlam. According to Sanlam and research that's been done by scientists, the first person who will live up to the year 200 has already been born. Has already been born. So this is a person who not only has to work the usual formative years like the rest of us, attend tertiary institutions for education as has been highlighted by our previous guests, but they need to put in a lot more effort into saving for their retirement because boy, have they got a long time to go. And that tells us something, that we need to start thinking differently about what retirement actually is. Is it still about being an old person in your pension and retirement years? Or is it about experiencing the fluidity of multiple careers, the multiple lives that you can choose to live, different places, different experiences, participating in different spaces of the economy? But this, of course, comes with a lot more effort because we really need to put our money behind what it is that we drive for within our retirement years. If we take a look at the government social grants, quite concerning that there's an over-reliance of South Africans to rely on the government for financing. Consider this. For every 100 Rand that the government spends on social grants, 42 Rand is spent on children. 41 Rand is spent on pensioners. The remaining 16 Rand, that individuals with disabilities, and a few of the remaining cents there, or a Rand, again on other administrative costs and food parcels that might be handed out. So this tells us something. If the government is spending a good 40% of its funding just to make sure that in our senior years we're able to survive, we clearly need to make sure that in our personal and city, we put in a lot more effort to save for our retirement. But the truth is, it's hard. I don't know about you, but it's been a difficult 16 months for many South Africans. And this has further been evidenced by the recent data that's been shared by TEDxUniversityOfSouthAfrica. They published the South African Retirement Reality Index for 2020. And it's a very bleak reality that shows that only 49% of South Africans have been able to save for their retirement. So half of us in the room here would essentially not have any funding available and would have to rely on the state should we decide to retire at age 65. Not a great proposition to be into, especially if you consider how much the government is able to offer you versus the lifestyle that you've become accustomed to. What raises further concern here about our saving rate as South Africans is that according to the Sanlam Benchmark Index, the survey released in 2020, it shows that even if you have been able to save for your retirement, you probably don't have enough. The large majority of South Africans, 61% to be exact, only have about 50,000 Rand in their retirement savings. Now, I don't know about you and your living expenses, but maybe that will get you by for a month or two, maybe 3 if you push it. But for the remainder of your lifetime, should that either be a decade or living up to the year 200, it certainly shows that it's not enough. Now, you must be sitting there thinking, well, Gugu, why are you depressing us with these figures? And maybe I won't even reach retirement. I'm going to die young and live a full life at the moment. But that's the thing about life. It's unpredictable, right? We never know how long we have or when it will likely end. And this is where we need to pay more attention to what it is when we talk about the JSE All-Share Index, the gold price, the Brent crude index, what's happening with the currency crosses. Because if you take a look at the chart on the right of the screen, what you'll identify is a chart year-on-year performance of the JSE All-Share Index from March 2020 right up to March 2021. And what you'd see in the middle there is a very sharp decline in terms of the JSE All-Share Index. Now, what you might know or not know is that when you're saving for your retirement or saving through your pension fund, essentially what you're doing is investing your money. This is not money that's just put in a jar, left to gather some dust, and hopefully turns into a golden egg for your retirement. This is money that is actively involved in the market dynamics on a basis. And when I talk about the markets, we talk about the globe. So whatever's happening in China, how they're approaching the gaming regulations and how they are tightening up their restrictions on cryptocurrencies and Bitcoin, whatever's happening in the US with its political movements, whether it was Donald Trump and his beef with China, or even the fact that they're experiencing sluggish economic growth at the moment, or even the fuel shortage in the UK. Those are all factors that seem like they're far-fetched, have absolutely nothing to do with us on the tip of the South African continent. But believe it or not, when it comes to your pension and your investments, it does. So next time you hear someone talk about some big world organization that is meeting and conversations that might be happening, pay a little bit more attention and consider, what does this mean for my money? Well, as we reflected on this, I think it's quite clear that we clearly need to start having different conversations about money, right? And considering it in a very different light. And it's quite read on recent research that's been published, which highlights that millennials, likely born between the mid-80s to the early 90s, are a generation of individuals who are the highest income earners of all time. I see you shaking your hands there, and you're quite right. We've got something to celebrate, but we're still lacking in accumulating assets. And that essentially means that we need the land, we need the property, we need the assets that will make money or for themselves in the future. And that speaks to creating a whole new generation. Never mind Gen Z. What we're looking for is Generation W, Generation Wealth, in our lifetime, making sure that we actively participate in making sure that our pockets have a lot of money. But we need to start doing this by talking about money. As a broadcaster and someone who interviews a number of people in their professional capacities about money, it's very easy to talk about, oh, well, my business is doing one, two, and the other. Oh, well, the financial results of this entity have performed in this particular manner. But how often do we talk about money and how we relate to it? How I, Gugu, struggle with a foot and shoe fetish. How maybe doing my hair every other month is something that I enjoy. How maybe investing is not something I've prioritized because, oh, well, I prefer going on holiday. And these are the honest conversations that we need to start having in and amongst ourselves. First and foremost, starting at home. I won't go any further about black tax, but I think one thing's quite clear is that we need to start communicating more about money, its potential, the opportunities that it presents. Because if money presents anything, it gives you options. Whether or not you choose to study for 7 years or 5, whether you choose to go on holiday and a sabbatical, or open up a business. And these are the kind of conversations we need to start stimulating in our own communities and with our families. But we also need to start talking about money within our professional circles. Ladies, every month in August, we talk about gender parity, making sure that we earn as much as we do with our male counterparts. But do we ever stop to think and wonder, male counterpart, tell me how much you're doing for this particular project so that I can charge a fee that's in line with yours? Those are the kind of conversations we need to start having about money in our circles as well. So when you interact with a peer, when you interact with a colleague, be bold enough to start having those open discussions about money in that particular light. So next time you see those numbers flash on the screen, or you hear a voice behind the microphone that tells you about the gold price and its trading, Brent crude oil and the South African rand, pause, reflect, and shift that narrative to suit your financial journey and understand what it means for you and your money. Thank you.